It's time to talk business with our partners 2 Degrees. The US Federal Reserve has cut interest rates by 0.25% as unemployment risk clouds the world's largest economy. Garth Bray's been watching the press conference with the Governor, Jerome Powell, and joins us now. Garth, good morning.
Good morning. 52 minutes of Jerome on a Thursday morning. What could be better if you're really into your business, I suppose?
Because we knew the rate was going to come. The markets have priced it in, but we're interested in what he's saying going forward from here, right?
Yeah, and look, I guess what the real the takeaway line is there is no risk-free path here because of those numbers. They're still seeing inflation upticking slightly. They're still seeing sort of a track around 4.5%, I think. But just that part of their mandate to balance job losses against rising inflation means there was an opportunity there. There's actually a little cut from Jerome Powell we can play for you now.
In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance.
Interesting.
So tariffs are looking like a one-time hit. They're still thinking for inflation. GDP projections up slightly from, I think, 1.4 to 1.6% across the year. So, but as they're saying, policy is not on a preset course, which takes us to whether there was a row in there.
Yeah, exactly. And we heard, well, there was Trump's guy in there, wanted a double whammy, which is to be expected.
Oh, well, look, there's a wee chart I can show you. This is called the dot plot. I love these things. This is basically every one of the dots on this chart is how somebody voted for how they see the inflation rates going forward. You can see that on the far left there, everybody's sort of clustering up at the top there. There's one little dot all on its own down the bottom going, holy heck, this needs to be a whole lot cheaper in here. I want a big cut. He was the guy, this is Steve Merrim, who's Trump's plant, as you point out. He wanted a 50% basis point cut. He got voted 11-1 down on that. And a lot of people are saying that's the Federal Reserve saying, hey, buddy, cool your jets. This is about more than just what one president, even a president, wants. There's a lot going on here. We need to, and so Waller and Bowman, who are two governors who are thought of as potential successors to Powell, they sided. It looks like they kind of lined up around Powell and said, look, it's the economy, stupid, not what the president wants.
And more than that, Garth, it's not just about this particular decision, but it's the independence of their Reserve Bank equivalent, right?
Because if you look at the impacts, I heard Sharon Zollner talking to before, it really does matter over the long term, how this economy functions, the decisions they make in there. I mean, I know our dollar bounced around a little bit. We can talk a bit about what people are saying could happen from here on in. But I mean, it's this guy Myron apparently wants about 125 basis points cuts across the rest of the year. So that'll be a 75 next time and a 50 after that. I don't think he's going to get that. But there is a real spread, a dispersion of views, is how they phrase it when they mean quite a shit fight going on about where it should go from here.
All right, what does all this mean for us in a lot of New Zealand?
Yeah. Well, I mean, I think we saw the dollar flicker and bounce around a little bit, but I guess into the long term, the people that know a lot more about this than me sort of see it being supported around the 58 cent mark and maybe even sort of rallying up to around 61 cents US just because of the downward pressure that, falling rates and a projection of falling rates would have on demand for that currency. You've seen, I think, in offshore markets, I think in Europe, a lot of hedging around people buying back into US stocks because they want to try and protect against currency risk. So people do see a future where the US dollar is lower. That probably means ours will drift a bit higher.
Jamie Beaton, we've had him on the show a couple of times. People will know him, young but very successful entrepreneur, Crimson Education, and a bit of chatter about maybe he's going to throw his hat in the ring to the political scene.
Yeah. So this is our Dilipa Fonseca has had his ear to the ground in the eastern suburbs of Auckland, where apparently Beaton has been testing out the prospects of running in Tamaki, which is the seat that Brooke Van Velden took off National Simon O'Connor at the last election. And so there's some talk that he was looking at that quite seriously, but we've now had the Mr. Beaton is not interested in pursuing a career in politics. Some talk that behind that, and sorry, I realise we're getting well off business here, but it could have had some quite negative impacts if National's vote drops. They don't have many list MPs. If he takes another seat out, then they've only got about 5 list MPs, Jerry Brownlee and Nicola Willis, I think, one as well. That's fewer lifeboat seats for them, so perhaps he was guided in other directions. he's busy, got Barrenjoey Capital Partners off in Australia trying to raise money for Crimson Education on a $1.7 billion valuation. Come on, mate. There's better things to be doing, probably.
Yeah, bugger than sort of faffing about in Tamaki.
Would have been interesting, though. Would have been very interesting for education policy.
Garth, thank you for that. Garth Bray from Business Desk. And we talk business every day thanks to our partners, 2 Degrees.